Welcome to TradeTheNBA.com. This is John. This report is for the 5th of September, and there just really wasn't a whole lot to do today. We'd been talking about this soft bullish run that we were in place with, and it just got even tighter as, you know, you have green slightly under cyan, you have red under cyan as well, but they're sort of like paralleling, coming off the dip. But we had that slight improvement of short-term buyers with the steel rising, and that was enough to keep it above the 50%, and boom, took us right up to the 61. And we passed that key threshold, the 29-23 range was something I was talking about, critical closing above, and we got back up there above the 37 range. So that was a significant improvement, which was necessary to sort of top out at this range again, and then it's going to be that you're going to have to break back over that 69 right here at the 76%. So that's going to be the next critical threshold, so to speak. NQ looking almost identical in this particular case, a little bit tighter with those readings like right up against each other. This is where intraday becomes a little bit more significant because you're able to see breaks in the trend of that. And of course, they fought desperately to bring back that euro because it's getting a dangerous point. A break of that 110 would have been ugly. It's already bad enough that they had the dip below the zero here. We knew they would try to bring it back up to that. The question is whether this be enough to sustain it. It's pretty close. If they get above that negative 13.5 with the green and red here, they got a chance to pull it up. You're already pretty extreme though with short-term buyers having pushed this, because that's all that was just a giant short cover push back up and holding for now, but the problems in the EU are not changing at all. Oil, big jump back up again. It's been within this tight range, and the speculation of back and forth whether the economy is, because you can't deny if the oil consumption is being used, then there's growth out there, and this is the thing, it's being used up despite the flexibility of turning the spigot on and off. That bodes well. If you can break out of the range, that would suggest, you know, broader expansion. We're not really quite in that phase yet because of still the trade war concerns, but you know, if you're going to have that war, that's the time to do it, because the economy has been good enough that it can absorb some of the changes that are taking place, and so it's worked out. GDP, you can see, is suffering, but China is taking a much harder hit. They just think they can theoretically outlast. We'll see when it starts going south. They might be surprised how quickly that can go that way. Gold, again, this is that reserve, and it's letting you know that there is a lot of strain tension-wise, and the feeling is that even added liquidity at this point isn't going to stem that, because that's what kept it artificially low for so long, was that constant supply of money. From an intraday standpoint, this was pretty basic. We had a small decrease right back to the 29.23 because we've gotten above there from the pre-market, came right back to it, held up on there, produced a new buy signal that came in right in here with that blue candle that you see on the P2 pivot. So that's the secondary pivot of the red DOC at a higher value, and boom, that produced the move up. And then it was just pretty much not a whole lot happening. Even when the DOC spread came in here, right here, that short only lasted for a few bars until you ended up right here with the buys. It was pretty much a neutral nothing, and that gave the next run to where we ended up at the peak, and nice and gentle from that standpoint, slow and effective. From the 50K standpoint, this is just a return back to the same levels that we had pretty much exited at from the last break, and that often happens here. The key we're looking at, though, would be higher or lower shakeout. In this particular case, we're actually consistently higher, so the potential for continued positive is still there. You can see we're still having rising magenta, as well as you can see the yellow shakeout is rising and not overbought. What I was looking at was the positive extreme that was right here that had the low of the 21, which we filled in with the dip down, and so that took care of that. So not necessary to fill in any of those blanks, which makes it clean and easy. So this was sort of not a whole lot to do, but just go with the signals. So this was an easy one after an excessively long video the other day as we were going through a lot of these different setups. This one short and sweet because that's what the market was. Long and sweet in this particular case with very simple, not a whole lot to do with that. So we'll just take it as it comes and keep going with it. As always though, trade well. We'll talk to you later.